Hey everyone, welcome to the Power Investing Weekly Macro Review, where we take a look at a top-down view of the markets through the use of charts and relative strength. So we always start with our triple play chart, and on our site we have it on the daily version. Then I'll flip over to my trading view to look at it on the weekly and 65-minute. But as we can see here on the daily version, we did finally get a slight reversal here into the end of the week in the SPY, closing towards the high of the week after getting a real rough start on Monday that fought back hard. Now during the week it was certainly a lot of volatility, but ending the week towards the highs was a nice sign for the markets for a potential bounce play. We are in a downtrend, of course. We are in RSI bear ranges across all three of these. So everything is suspect until we move back into the new bull range. But for now, we do have some room to retrace if we get some follow through here. As you can see, though, these certainly could just be bear flags on the daily here, and we could, if these markets are super weak, we could roll right back over. So we've got to be open-minded to that, but after the strength we saw on Friday, it looks like we could have a low end for now. In the IWM, the chart looks very different because it's fallen a good bit harder and it never really bounced there at the end of the year. However, it looks like we have a potential zigzag here and fairly equal moves so far on those two legs. This also has an RSI pattern or a signal kind of scenario that I like a lot to pay attention to, which is a long-term divergence to a short-term divergence. Getting those in sequence like this a lot of times can be a good signal for a strong and fast bounce. Again, it doesn't necessarily mean it's a full reversal, but could certainly take us back up to the underside of some of these areas. Now in IWM, we really do need to get over this 208 area, as we'll see here in just a second in the weekly. As I flip over to the trading view, the weekly, you can see that the SPY is the only one really kind of stronger in the bull range, even though it fell hard as well and closed above the MA band. The middle MA band here for the week. QQQ is hard testing its 40 level, so still in the RSI bull range even after the fall we've seen, and right here below the bottom of this previous area. Now this fight right here could just be our back test and then we fall further, but if we can get back over and up in here and over the MA bands around 365, it could just be a normal retracement slash pullback. Like I said just a minute ago, IWM's a bit rougher because it already broke the range pretty heavily, but if we get a move back over the 209-ish area, 2875, 209, and that can hold, then maybe we can get back in this range and start to repair here. But any rejection in that area is likely to come back and retest or at least be a good bit more volatile. When we flip this down to the 65-minute, even with the strength we saw Friday, we still have to realize this is just a small little base area. It is a lower high in the two larger of the indexes, but we are still in bear ranges across all of them, and the IWM did not make a, higher low in these two. The IWM made a lower low. Now, the good part about that is it looks like a potential for a failed breakdown the way it kind of busted through it on Friday. But again, we need continuation and we need to get over these MA bands and they need to flatten out and provide some support before we can get really excited about where these markets might go, even in the short term. Now we move back over here to the world view on our ETFs. Something to note is we still have a lot of Latin America up here leading, the highest RS here, and some of them had good weeks, with Brazil still having a real strong week. However, when you do sort by the performance for the week, it's interesting to note that the SPY here is at about number 7 performance for the week, and 14 is where the QQQ is. Even though it was only up 0.03%, it did come back into break even after a pretty rough start or middle of the week. So that's something we need to be aware of, is that it did show some strength here against the world as well. Now we do still need to see the relative strength pick itself up as well, but absolute strength on the week is certainly nice to see. When we move down to the intermarket analysis, you can see here that the oil is still leading, and then DBC and DBA. So commodities are still leading. However, with the dollar here at UUP being up here at number 4 and having a pretty strong week, the other half of commodities that a lot of people don't think about, things like copper and gold, the metals, took it pretty hard. Now, I think part of the reason energy didn't take it hard is because of the geopolitical stuff that's going on right now. So that'll be something to watch to see if this dollar gains catch up with the energy, or if we get into a position to where the dollar starts to come off and it just adds even more of a tailwind. But we will certainly see its effects right now in the metals and see how that kind of plays off. A lot of the metals are back near some support areas and low of the ranges, so it's going to be worth watching to see how they perform. Now, our bonds are right in the middle, our equities are at the bottom. This is not a favorable setup for equities. We got to see the equities work their way back up this short-term relative strength before we can get a little more of a good feeling that things can start to repair. Now, the size and style is still value, mega value down to small cap value, then mega growth down to small cap growth from the stance of the relative strength rankings. But if you rank it by the week, you can see right here that mega cap growth actually was the top performer for this week. Now, Apple had a good bit to do with that, but that is something to pay attention to, that even if growth does come back into favor short to midterm, we may want to pay attention because it's likely that it could be on the large side, as people are still a little bit skeptical of the small caps based on how everything's acting, and with good reason, obviously. So if we're going to look back on the growth, this is telling us that maybe we should lean towards the larger names. And when we look down here in the sectors, we kind of get the same message, seeing that while technology is still way down here on the relative strength, it did have a 1.8% positive week this week. And when we go down and look at the other two on the equal weight and the small cap, technology was negative 2.51 on small caps and negative 0.64 for the week on equal weight. So it is really more the large cap. Again, Apple had a lot to do with that, but there was a lot of other larger names too that started to pop out quicker as well. We're still seeing all of the sector levels being led by the defensives, but it is something that we have to pay attention to, is that these down here at the bottom, if we do see some reversion, they're the ones that have beat up the most, so they may be the areas that see the strongest bounces over the short term. Now, from a universe standpoint, we can see that when we flip over to that page, we can see that in the RSI chart, it's in a bear range. It's down towards the bottom, but it is diverging on both the RSI and the CFG. So the equal weight universe is trying, but price has to follow before we take any action based on something like that. When we go into the breadth, we can see that the new high, new low differential is in negative on all three of our signals. That is a longer term sell signal. It's definitely something we want to pay attention to, and it puts bounces in a much more skeptical or cautious position until they prove themselves. So until these signals, now the 30-day moving average is just below zero, so it could turn back up pretty quickly if we do see this bounce start to work higher. But it is something for now we need to be paying close attention to. Now, from the moving average standpoint, all of them are right near the bottom quadrant. Even the percent above the 20-day moving average is in that bottom quadrant. Normal pullback area for a lot of just a normal correction, but if it is something deeper, we can certainly see these weaken more. What we do want to note and pay attention to is, again, the long-term to short-term divergence on this breadth thrust and the McClellan summation. Often those are really good signals when you get this kind of a sequence, at least for a strong bounce. Not necessarily a full-on reversal back to a new leg higher, but the bounce off of them tends to be have a good bit of velocity. When we go down to the percent making new highs, new lows, we also have this divergence from a short-term standpoint. And then from a longer term over the last month and a half or so, 2 months, and then the very short term over the last week. Again, it's not happening in the longer, showing some of the depth that this particular pullback or correction is having some of the velocity and some how deep some of the names have gone. But on the short term basis, it is starting to improve for us. And again, a lot of times this can precede a little more of a retracement. Now, from the equal weight standpoint, as far as our sectors, again, energy, utilities were a bigger mover up to this week, consumer staples and financials. These are all tend to be still defensive, and we still have the consumer services, discretionary communication services, technology, healthcare, all on the bottom. But I will note here that from an equal weight standpoint, notice that the consumer discretionary actually ended up flat on the week. When you look in there, retail had a pretty strong week. Internet and direct marketing is looking, even though it's just beat to death, looks like it may be starting to try to put in some stakes down here as well. So when we move down, you can see here real quickly before we end this one, is in the subsectors, when you sort these by the RS movers over here, which I've already done, you can see some of these discretionary, retail, diversified consumer services, restaurants and leisure, media, entertainment up here towards the top. So even though they're not high RS, they are the ones who have moved the most over the last week and tend to be some of the ones that had stronger weeks. So it might be an area we want to pay attention to. Now, one thing to note is if you go in and look for securities inside these areas, noting that they are very low or lower or relative strengths, and we're in a pretty deep pullback, you go ahead and look for the strongest names in there. A lot of times I talk about looking for the middle of the pack in the relative strength, but here you want to look for the strongest names if you're in one of the weaker sectors. Can give some great opportunities. All right, so I hope this helps. I hope this gets everybody's week started to kind of give you an eye where we are. I mean, bottom line is, as we started to bounce last week, it looks like there's a chance that this could extend some, but price is the thing that has to prove it to us. So you got to keep your eyes on that and make sure you're open-minded to either way. I hope this goes well, and I hope everybody has a great week.